to see Zomato in your list of Motilal Oswal top 25. That means you have bought into that IPO, and that was interesting for me because I always saw you as an old-timer kind of an investment analyst who would buy the Marutis and Hero Hondas of the world. But clearly you have adopted the new age digital kind of technology companies as well. How do you go about valuing them, Raamdeo? I want to hear it from an old-timer like you.
Yeah. So I had exactly as expected by you, I had the struggle, and it was difficult for me to, I could see the excitement of digital businesses because I read few books, and then I said, let's look at it very, in a very unemotional way, in the sense that first saying that I don't understand and I can't understand, let's try to understand, because digital businesses have become seriously large in US and China particularly, these two places. And India is the next third place where it is going to be built. So I said, if we remain in what you call denial mode, we'll never learn. So then with the help of team, we started looking at in somewhat different manner. And because the accounting of these digital companies are quite funny, in the sense that all the growth capex, they are built in the P&L, not in the balance sheet. If you build a cement company, your capex is coming in the balance sheet, not in the P&L. Whereas when Zomato or any digital company is building up client base and seriously large client base, that entire expenditure comes in the P&L, and hence that looks optically very, very loss making, but they are actually not loss making, in the sense that if you look at what they do, and if you kind of give some kind of, if you can remove the growth capex from the P&L, I think they are inherently profitable. Bulk of them are profitable, and that's how I try to. And then what we do is that okay, these businesses can scale up very rapidly to very large level, and they are asset light fundamentally. So the value of these companies can be large potentially, and we have seen actually when the Indian IT happened between 95 to 2000, when CNBC had just about started. You know, at that point of time, we made a lot of money because you know, that time model was very clear, in the sense that it was very profitable and it was coming through the P&L. But it was the value migration and the start of a completely new business, and the growth was massive. And we saw from less than 1,000 crores, Infosys climbing 1 lakh crore in 4 to 5 years. So that was a kind of a learning from where we started, and we said that this is the place, this is the opportunity where large businesses will build. Which one will be successful? How successful? We don't have that kind of a you know, what I would say, grip that okay, this company will become very big. But we know out of 10 companies, 2 or 3 of them will become seriously large. And I think in next say 5-10 years, even 10-15% or 20% of the total market cap will come from these companies. So keeping that in mind, I said let's start. This is a simple business of deliveries. We understand the economics, and let me try to put some money over here, thinking that it is going to be a portfolio of companies rather than one company.
And catch the rest of that exclusive interview with Raamdeo Agrawal on businesstoday.in.